As mega cap earnings are looming large, starting on Wednesday, Meta, Microsoft, Tesla. Thursday brings us Apple. You all know by now, you got to wait a while for NVIDIA, but these are the ones right now, Bryn, that matter. They always matter. I feel like maybe they matter even more. Why? Because tech has lagged so much to start the year. Nowhere to be seen on the best performing sectors list, where energy leads the way and materials is next. And industrials follow that, and then on and on and on. And then you finally get to tech, which is down 1.25% to start the year. What do you think?
Well, it's been a great 1, 3, 5, and 10 years for tech. So it's nice that some other sectors are actually starting to perform and pull up the weight. You know, I own all of those stocks except Meta. I agree with you. I think next week is going to be incredibly important. Meta does not have a cloud, so they have advertising. So we're going to need to hear how they're going to monetize all of that spend. I mean, is this going to be a metaverse 2.0? You have Microsoft, which is in the software space, which everyone's like, software is dead because of Claude. And so with Apple, looks terrible technically. And so I think you have this, very distinct set of circumstances with these companies next week. And I think investors want to know, do I want to keep these heavy positions or do I want to continue to diversify? And so the jury's still out, but I do agree this is going to be really important for all three of those. I feel Tesla is less important because we're more interested in like what's happening with robotaxis. We know that earnings I don't think are going to be great from car sales, but the investors have been more than happy to discount that and say, we will give this stock a high multiple because of the future earnings of Optimus, robotaxis, and Cybercab.
Let's show you once again the mega cap performance year to date, just to give you a scorecard on what we're talking about here. You know about this huge run in Alphabet, which is up 5.5% year to date. It's picked up right where it left off in 2025. Amazon, has it woken up? Maybe. It's up 4%. You could make the case, I think Bryn's right, that Meta is the most important next week just because of that big slide last quarter. Weiss, you take a look at that. Could you make the case that it's Meta? Remember the stock?
Yeah.
What it did after earnings last time? Because, Mark Zuckerberg, they talked about all the spending that they're going to do. Could you make the case it's Apple, which is off for 8 straight weeks? They have a lot to say. Could you make the case it's Amazon, which did next to nothing last year but is off to a good start? Maybe Microsoft, stock up 5% or so in the last 12 months. There's a lot going on here and a lot to prove.
And I think Apple's a completely different bet, because the bet there is, will they be in AI or will they not be in AI? So you're going to need an announcement like that in the call. I don't think you're going to get it. But, Bryn makes great points on Meta, and I've been thinking about it recently. And I'll just, double click on what she said about Meta. Meta's building and putting all that CapEx into their own products right now. So versus a Microsoft spending similar amounts roughly that can leverage that cost eventually across their cloud as well as their own products. So they're also the tool belt, which I like. So it wouldn't surprise me. I know this is a way out there thought. It wouldn't surprise me if Meta one day goes into the cloud business. I mean, they've got the capital to do it, and we know there's a shortage of cloud capacity with all the AI. So, but this is a critical quarter for Meta. I actually
there's the chart, right? Yep. That you see before you go down the slope.
Yep. On
the far left side of the screen. That's exactly when the earnings report last happened, and that's exactly the slide that followed suit. Now,
the report was good, by the way. It was just the commentary, which was not.
Now, when they've gotten a smackdown from either the market or a shareholder, Brad Gerstner, they've listened. They've listened. Will they take that to heart, so to speak, this time around and tell you something else about the amount of money that they're willing to spend so that the market can be soothed somewhat about the time frame for the return on all that invested capital?
And the answer is I think they will. I think they will, because he has done that. If you go back to when the stock's trading in the 30s, and the issue was, do they have a mobile app or do they not? And they rose to the challenge. It had already been planned. So I think what he's going to do, he's not spending money recklessly. He doesn't do that. May seem
well,
that way.
No.
The way he's seen that way in the market.
What do you mean he doesn't do that? That's the whole point that the stock, I think it was in 2023, had like his worst year ever, because it was deemed that he was spending money recklessly on this metaverse and all that other nonsense that was away from the core of who they are. And that's why Brad Gerstner had to write the letter.
Right. And they're not doing that. I don't think they've done that since, because lesson learned. So I think it'd be very difficult. So I think that he will come out and talk to about it. He will come back and talk to an ROI on those spending dollars. But again, it's wildly out there. It wouldn't surprise me if they go into the cloud business. They should.
All right, Jimmy. Like I said, you can make the case for a lot of these names. Which one stands, out there with
Amazon.
all of the spotlights on? You think it's Amazon?
I do. And look, part of this is just pattern recognition. For the last more than a year, these stocks have not been moving monolithically. The so-called Mag 7 have not been moving together. We know that. And what we have seen with basically all of these names is that at unsynchronized times, they go into the doldrums and then they rally, right? We saw that, Scott, with Apple last year. After a long rally period, you just shot to the moon. We saw it with Google. I think Amazon is due. When I look at the valuation of the stock, yeah, it's a little bit pricier than the rest of them, but we know that's at least in part because they're sinking so much into their business development. Whether it's Amazon Web Services, whether it's logistics, I think that the valuation, if you adjusted for that, is a lot cheaper, and that's the one that I think money is going to start to flock to. I don't think that something like Microsoft is in the hurt locker, but I will be interested next week to see how it responds to earnings, and here's why, Scott. I would expect the earnings are great, but when we see a stock that is down year to date, I wonder if any pop on good earnings is used as an excuse for shareholders to actually take money out. I think that share price reaction to what I expect to be good earnings from Microsoft will be a big tell, and what I expect, Microsoft probably comes down even despite good earnings.
Microsoft has kind of been in the hurt locker. Can you pull that chart out a little longer to show?
It's down more than 15% from its high.
Exactly what we're talking about, either from the high or, I mean, that's not a really impressive chart. That says hurt locker to me.
I hear you. And that's why, just to be clear, I think that they will have good earnings, Scott, but I do think that shareholders will be looking at that as a potential exit ramp. So I wouldn't expect a pop.
The question is on Meta and Microsoft. Have they pulled forward a disappointment in the quarter? And the reason the stocks are up today is that they think the stocks have fully absorbed that news and moving up, is my guess.
It's good that we'll go to Kevin now, because he owns all three of Meta, Apple, and Amazon. You own Microsoft too. So you've heard what everybody has to say. And now you can tell us what you think about who your own spotlight is on the brightest for next week.
Well, I will say that Amazon was my #1 pick this year, and I, like you, agree that these numbers should be very positive and constructive next week. So I don't think they have the most to prove. They had a horrible year last year in the light of all of the tech stocks rallying. I think the company that's really most under the microscope is Apple. You talked about 8 weeks of a downtrend, Scott, which is important, but the deal that they made with Google and Apple specifically for the AI, the pressure's on them for Siri, because if they can get that right, you have the ability to have another super cycle of sales, or maybe the first super cycle that's actually driven by AI. The support of the service business, we kind of know what we're going to get there, but I think everything boils down to what they say in guidance, how they talk about artificial intelligence and Siri, and if they don't get it right this time, I think they have more riding on a problem than anybody else.
I mean, we every time these earnings come around, we act like it's the Super Bowl is on the other side of what, when we say the week ahead, it's like this is the Super Bowl, and we always suggest that it's important. Do you think it holds more or less importance now that the group has underperformed? I could make the case before, and I probably did several times, that, well, because it was sort of like a monolith and it was almost holding up the market, that it mattered more than anything else. Like, these need to deliver now that you can't have one of the legs of the stool fall out. But if you look at the performance of the market now, the other legs of this market look pretty darn sturdy. So maybe they don't hold the same importance next week as they otherwise might.
To me, they do. only because of the weighting and how much of an impact these earnings have on the overall S&P 500. So if you have expectations that the S&P can deliver in excess of $300 a share, you need the big boys to come to the table and deliver, just like we'll need NVIDIA later in the month.